How's it going, everyone? It's Sam. Sorry for the get up. I just got done with a run, so the shirt is soaked, but I wanted to make a quick video because we have a big week this week. We have 4 really important earnings, actually 5. We have the Fed rate decision, which there's actually a decent chance that they actually hike rates right now. We have the ongoing Iran war. And we also have Bitcoin at a very interesting point. So I want to make a quick video. Again, just getting out what you need to know for the week before I head into the cottage festivities here. But yeah, if you don't mind, hit subscribe so you can see future videos just like this. If you want to trade crypto, there are links underneath the video. You can start trading on BYDFi, you can start trading on BTCC where they have a big bonus, or also Ubit. So check those out. Now is the best time to set up long trades for the bull market. And you can also trade stocks, no KYC there. So again, I apologize for this. I just got done with a 10K run before the family woke up to get a lot of exercise in before we have a big breakfast and drink over by the water. So yeah, I wanted to make a video though because we just had some pretty important earnings last week. We had Google. The whole market kind of fell down on Google's earnings on the raised CapEx numbers along with Iran. Now this week we have the M's reporting on Wednesday. We have Microsoft and Meta, obviously 2 of the major hyperscaler companies spending I don't even know how many figures it is, right? Like hundreds of billions of dollars a year. This is coming right after we heard from Google that they're going to raise their CapEx guidance for basically $205 billion this year, which is just insane. So we're going to have to watch to see, are they doing the same thing? If not, maybe there are concerns in the chip sector. If they are, then people are going to be worried about the CapEx spend and whether there's going to be a good ROI there. Now, I am heavily invested in Meta. I'm also very invested in Microsoft, directly and indirectly through the indices. But I think that their earnings are going to be really good. It's just that a lot of people will be watching those, those EPS numbers, and then also top line revenue growth. Is it reaccelerating, kind of like Google was? And also, what's their CapEx spend look like? Now, we also have the Fed rate decision right before those earnings. So the Fed actually has almost a 40% chance of raising rates. I don't think they're going to. I think they're going to keep rates the same. I think raising rates when oil's spiking, it's not going to decrease oil's price. It's just going to make everything less affordable outside that, and could be pretty disastrous, I think, to a lot of sectors if we start seeing interest rate hikes. That being said, I think that even strengthens the hyperscalers moat. It seems like everything that happens makes the hyperscalers fundamentally stronger, even if the price doesn't go up. But yeah, if other companies can't get as cheap a debt, and they, the hyperscalers are just these profit machines, I think it's going to help them long term, or at least it won't hurt them. But it could hurt the stock price because the risk-free rate of return goes up. People think, why am I investing in the stock market when I can get 4.7% in a 10-year treasury? Again, not my thinking because I'm young. I have risk tolerance, but it is something to consider. Now, on Thursday, we actually have Apple and Amazon. So we have the A's on Thursday. Obviously, Apple is a major profit machine, not really putting a lot into CapEx, but then Amazon obviously is going to spend a lot on CapEx, probably the biggest spender, and they can afford to be. We're going to have to watch what AWS is doing. Is it reaccelerating just as much as like Google is? I know that they're not going to grow AWS by 82%, but they've been growing it for the last 3 or 4 quarters in a row. Hopefully they can continue that revenue growth acceleration. And then we also have MasterCard on Thursday as well, which is kind of an important company because they give you an insight into what the consumer is doing. And then Bitcoin. Bitcoin is sitting right above the 200-week moving average. The 200-week is at about 63,000, just slightly above 63,000, which means it's typically a pretty good time to be buying Bitcoin if you can buy and hold for the long term. Last cycle, when we were on this point in the cycle, the 200-week moving average was just sitting around 20,000 or so, maybe slightly above or below, but within a couple $1,000s of 20,000. It was a pretty good time to be buying for the long term. Of course, it can go lower. Last cycle, it went down 20-25% below the 200-week, but this has always been kind of the bottom indicator, or one of the bottom indicators as to the bear market. And we're only a few months away from when we typically bottom in the cycle. Usually it's around October, November, December of this year. But every cycle is slightly different. Let me know your thoughts on all this underneath the video. Let me know if you're doing anything right now, if you're buying anything. I do have some cash ready to buy some of the hyperscalers if, I don't know, if I think their earnings are really good and yet the stocks sell off. I think they're extremely cheap compared to where they should be, long term at least, and the market just can't bear the volatility. Let me know your thoughts though underneath the video. I appreciate it. Again, you can check out the links to BTCC, to BitFi, and to Ubit, and I'll see you in the next one. Bye.